Hello, thank you for tuning in. My name is Brandon, and I'm co-founder and head of education over at Overseas Defi. Appreciate those of you tuning in for the live stream. We do this every Tuesday night now at 6 p.m. Eastern. And really the idea is for you to be able to stop by and ask me questions in real time. And I do my best to answer any and all of your questions about crypto and DeFi. Yeah, in my heart, I'm a teacher. I've been teaching. I was thinking about this morning. I have been teaching technology in one form or another for going on 30 years now. And since the summer of 2021, my primary focus has been on teaching crypto and DeFi and Web3 and wallets and seed phrases and tokens and gas fees and everything that goes into setting up and managing a crypto and DeFi portfolio. So tonight we're going to be focusing on how to borrow against your Bitcoin. Now, some of you might not even own any Bitcoin. So I will talk tonight about how you can acquire some Bitcoin. And it's a special version of Bitcoin that you can use in decentralized finance. So we'll talk about exactly what I mean by that. We'll talk about one of the original tokenized assets on the blockchain is tokenized Bitcoin. So we'll talk about what that is, why it has to be that way, and then we'll get into the nitty-gritty of exactly how you can purchase and tokenize some Bitcoin, and then use that as collateral and actually borrow money against your Bitcoin. This is, this is the standard playbook for wealthy individuals. Wealthy individuals purchase assets, and generally they don't sell their assets. They hang on to their assets and they leverage their assets and they borrow against their assets. A good example of this is Elon Musk. Back a few years ago when Elon bought Twitter, he didn't take out a cash. He didn't sell a bunch of his Tesla shares to be able to purchase that company. He borrowed money against his assets. Okay, he had I don't know how many shares of Tesla stock. So we posted that stock as collateral, borrowed I don't know how many billions of dollars, went out and bought arguably one of the most productive assets. He bought the entire company of Twitter, changed the name to X, and on the story goes, right? So what we want to do as investors, as much as possible, we want to accumulate assets. And then when we need cash, we can borrow against those assets. So tonight I'm going to be focusing on doing that with Bitcoin and the little details of how that actually works. But that's the theme. And I, as an investor, I like to invest in these crypto assets. I believe in Bitcoin. I believe in Ethereum. To a lesser extent, I believe in Solana. I'm not a huge fan of Solana, but I do have a position in my portfolio. I'm a big believer in a new blockchain called Sui. So I own these assets and I hold on to them for the long term. These are long-term investments. I believe in the debasement trade, even though the news cycle recently from mainstream media is that the debasement trade is over. I think that's a lie. I do not think that the U.S. government or any modern government around the world, I don't think these governments are going to stop the spending and actually balance the budget. If anything, it's going to go the opposite direction, which it already has been for many decades now, where these governments constantly spend more than they earn. And the way that they pay for that budget deficit is by creating more debt and increasing the supply of dollars. So dollars have been debased. They will continue to be debased. And so that's my long-term investment thesis. I want to own hard assets like ETH and Bitcoin as, you could call it, a hedge. It's a scarce form of money. It's a hard form of money, and it will, over the long haul, massively outperform the dollar. So while I'm holding on to these assets for the long term, I'd like to make them productive assets. That's another secret of the wealthy, is you purchase assets, you don't sell them, and then you lean towards assets that are productive, that pay yield. And opponents to Bitcoin will say that's no good because Bitcoin doesn't pay any yield. And that's going to be at the tail end of tonight. I'm going to refute that. We can actually make our Bitcoin productive. Okay. And that's the name of the game in terms of my portfolio being centered in decentralized finance. DeFi opens up the ability to make these assets productive, and borrowing against these assets is the first step. So before we get into the details there, and again, feel free to post any questions in the chat. There's a few of you viewing the live stream, so thank you again for being here. If you're watching the recorded version, I appreciate you as well. Please make sure to like the video and leave a comment down below. Subscribe to the channel and turn on notifications so you can be here for the next live stream, again, every Tuesday at 6 p.m. So just looking at the Bitcoin market, this is a daily chart. So every candle here represents 1 day of trading. And we can see the last low of the bear market in 2022. This bottomed out at about $15,000, almost $15,500. And then we had a massive rally over the next 3 years from into 2023, 2024, and up until October 2025. Just a humongous rally from 15,000 to 125,000. I should bust out my calculator and figure out the multiple of that, but a massive rally here in Bitcoin. And what we've had so far, tail end of 2025 and so far in 2026, is we've had some selling. Now, I wouldn't necessarily call this a bear market, because as you can see here, this has been more of what I would call a correction, a pullback, a resting point in an otherwise bullish trend. Now, if this dropped all the way back down to 15,000, then yeah, absolutely, that's a bear market. But regardless of what we call it, in my opinion, this is a deep value price for Bitcoin. So if you already own some Bitcoin, hopefully you got it at a decent price. Maybe you bought the top. I think we'll get back there and we'll get to new all-time highs eventually. Like I said, the debasement of US dollars and all fiat currencies, that's not going away. It's, if anything, it's only going to accelerate. And so once the liquidity comes back in, we've been kind of starved for liquidity in 2026 because so much investment liquidity and the so-called hot ball of money is going towards the AI CapEx stocks. So crypto has been starving for liquidity, but eventually that will reverse course. The Fed will have to begin quantitative easing or yield curve control, whatever they want to call the program. Bottom line, the Fed is going to have to monetize all of the debt and print massive amounts of dollars. So by all means, the debasement shall continue. And considering that, and considering where the price of Bitcoin is going to be 1, 3, 5 years out from now, I think this is a tremendous opportunity. Now, I'm also a technical trader, so I do various types of technical analysis. I'm not a big fan of certain indicators, lagging indicators. They're all lagging, but a lot of people like to pay attention to the relative strength index, so RSI. And if I had my RSI on this chart, which I don't, we are in deeply, quote unquote, oversold territory. I'm what they call a price action trader, so I'm much more interested in what the actual price is telling me. And I'm a big fan of just basic technical support, horizontal support and resistance levels. And I'm also a fan of Elliott wave. And then what goes with Elliott wave pretty well is the idea of the Fibonacci ratio. So what you see here is the 61.8% Fibonacci retracement level. Now, none of this is guaranteed, but markets frequently reverse at a 61.8% retracement level. So we had a big bullish rally move here over the course of 3 years, and we've now had almost a picture perfect to the dollar 61.8% retracement. Now the exact number there is 57,799. So 57.8K. I would love to buy a little bit more Bitcoin at that level, but so far the lowest we've gone is 58,000 even on, at least on the Coinbase chart. So technically speaking, from a Fibonacci ratio, golden ratio perspective, I think this is a great level at which to purchase some Bitcoin. Again, if you already have some Bitcoin, congratulations. I think the name of the game is to hold on to that for the long term. And hopefully what I'm going to teach tonight will enable you to be more resilient and better equipped to hold on to those coins rather than sell. So what I'm talking about tonight is borrowing money against your Bitcoin without having to sell. Now, I'm not a tax professional, but you don't, as I understand capital gains, you don't have to register a capital gain or a capital loss if you borrow money. It's not a trade. So in order to have a capital gain or a capital loss, you have to dispose of an asset. So you could sell some coins for dollars. Even if you sell some coins for a different coin, you're technically disposing of that asset. That would trigger a capital gain or loss event. But if we simply collateralize our coins, and I'm going to show you how to do this, if we collateralize the coins on a lending protocol, we lend the coins out, we can then borrow against that collateral. And again, not a tax professional, but that is not, in my knowledge, from what I've learned about taxes, borrowing capital on a lending protocol is not considered a taxable event. But again, if you really want to have the tax situation sorted out, obviously speak with your accountant about that. So rather than selling the coins, we're going to borrow against it. Now, if we look at the Bitcoin blockchain, it was invented way back in 2008, 2009 timeframe. Arguably one of the greatest inventions of all time. I'm a big fan. And the blockchain itself, what you can do, it's fairly limited as far as what you can do on the Bitcoin blockchain. So the blockchain is just a network of computers, and pretty much the only transaction that you can execute on that blockchain is called send. So with the Bitcoin blockchain, all you can really do is send your coins from one wallet to a different wallet, right? Now, somebody can send coins to you, but the send function, that's it. That's what you can do on the Bitcoin blockchain. You can't sell, you can't collateralize, you can't loan, you can't borrow against. You certainly can't do any swapping. You can't do any liquidity providing. So in order to do all these decentralized, well, in order to do anything besides sending coins from one wallet to another, for that, we generally need different blockchain technology that includes some sort of smart contract capability. Okay, the original smart contract ecosystem or blockchain is called Ethereum, and the asset there for the Ethereum blockchain is called Ether, or simply ETH. Okay, so once we have a blockchain with more functions than just the send function, right? And we have the ability to have these programmable smart contracts on the blockchain. Think about a smart contract as a software program or an app that is installed in the cloud. It's installed on the blockchain, and the blockchain executes that software, and we're able to utilize those apps on the blockchain to do different things. Again, things other than just sending coins from one address to another or one wallet to another. Okay. So when we talk about lending and borrowing against our Bitcoin, the first thing we need to do is get that Bitcoin onto a smart contract protocol, a blockchain like Ethereum, or nowadays I like the Base blockchain a lot. It's based on the Ethereum technology stack, but it's a lot faster, and the transaction fees, or what we call the gas fees, are much lower. So Base is a great blockchain for you folks just getting started in DeFi. I would definitely recommend your first DeFi experiences, you do those on the Base blockchain. So the question is, if we can't do any lending or borrowing or selling or buying on the Bitcoin blockchain, all we can do is send. How do we get our Bitcoin onto this other blockchain where we can do all that stuff? And the answer is, we're going to wrap our Bitcoin. Now, when I say wrapped Bitcoin, it is a representation of Bitcoin on a different blockchain. Okay, so I'll go through the steps of exactly how you can, quote unquote, wrap your Bitcoin and have your Bitcoin on a different blockchain. I'm going to demonstrate this on the Base blockchain because, again, it's the fastest, or it's very fast, very cheap for the transaction fees. And like I said in the intro, wrapped Bitcoin, that's one of the earliest examples of a tokenized asset. That's what these smart contract blockchains mainly do. Other than the smart contracts, they allow us to tokenize different assets. Some of you may have heard of stable coins, and the original stable coin is something called Tether, USDT. And what that is it's a token that represents $1. It's pegged to $1. So USDT is the original tokenized asset. It allows us to do all kinds of DeFi type of things with those tokenized dollars. And then along came a company called Circle, and they created their version of a stable coin that's called USDC. Okay, so USDT, USDC, those are tokenized dollars. Each token represents $1 in the real world. And by the way, Circle is a US company, and it's regulated by the United States government, and the SEC and all of that. So, you can count on each and every single one of those USDC tokens. Each token is backed 1-for-1 with $1 somewhere in Circle's bank account or their treasury holdings or whatever, right? And so there's a little element of trust. You have to kind of trust that Circle is doing the right thing, and they actually hold the dollars 1-for-1 to back up those tokens. I do. Newsflash, I trust that, especially considering that Circle is regulated in the US. And the next form of a tokenized asset on the blockchain. Nowadays, you'll probably hear that if you listen to different podcasts and watch different crypto-related YouTube videos. You'll hear about the asset tokenization, or the great tokenization. Larry Fink called it the great tokenization. I'm a believer in that. I believe in a future where all financial assets will be tokenized on the blockchain. So the next one, after you had USDT and USDC, then we have tokenized Bitcoin. So here's how it works. If you have a Coinbase account, you can do this where you can send Bitcoin into your Coinbase account. Now, just to go through this, if you wanted to deposit some Bitcoin into your Coinbase account, you just go to deposit, you go to deposit crypto, type in BTC. There you go. And now you have to choose, okay, which blockchain or network am I going to send the Bitcoin on? So if you own Bitcoin, if you own actual Bitcoin, by definition, that Bitcoin is on the Bitcoin blockchain. So when you send your Bitcoin or some of your Bitcoin to your Coinbase account, you would select the Bitcoin blockchain or network, and this would give you your deposit address. So you would send some of your Bitcoin to that address, not mine, whatever, whatever Coinbase brings up for your particular receive Bitcoin on the Bitcoin network address. That's the address to which you would send your coins. Now, always when you're doing something you've never done before, always start small. It costs you a few cents, maybe 15, 20 cents to send Bitcoin on the Bitcoin blockchain. That's what it was last time I did it. And so maybe send $10 or $20, wait a little while because the Bitcoin blockchain is pretty darn slow, but eventually it'll show up here in your Coinbase account. And now you've proven the concept, and then you can send the rest. Always start small, and that goes for Bitcoin, but pretty much everything that you're doing. If you're doing it for the very first time, definitely start with a very small amount. Give it a little tester. Make sure it goes through the way you think it's going to go through, and then you can do the larger amounts. So that would be a step. If you already own Bitcoin and you want to tokenize some of it and borrow against it in DeFi, which is, again, what we're talking about tonight, the first step would be to send some of your Bitcoin from your wallet into your Coinbase account. Now, once you have the Bitcoin in your account, I don't have any Bitcoin in here. Maybe later, if we have time, I can send a little Bitcoin in here from the Base blockchain. You can now withdraw that Bitcoin back out to the Bitcoin network. Or what I would do if I'm trying to tokenize that Bitcoin on the Base blockchain, I would click on withdraw. I would click on send crypto. Again, I don't have any BTC in my account, but if I did, I would, first of all, you got to put in the address. Now, we're going to be using a Rabby wallet in this demonstration tonight. Okay, so the Rabby is a wallet app. You can install the Rabby app if you just go to rabby.io. I'll put that in the chat real quick. rabby.io. You can install this app and set up your very own wallet. By the way, we do have a video on exactly how to do this. It's not long. It's right there. It's a 3 or 4 minute video, 5-minute video. I don't know, whatever. This tells you exactly how to install that Rabby wallet app. And by the way, when you set up a Web3 wallet, okay, you're going to get a secret phrase. We call it a seed phrase. It's going to be 12. It's going to look like 12 random words. If you use a Ledger wallet, it might be 24 words. Some seed phrases are 18 words. Anyway, those words, that is the master key to your wallet. Okay, and it's not just the Bitcoin blockchain. It's every blockchain and every coin that you have associated with that seed phrase, or it's all associated with the seed phrase. Okay, so the most important thing as you begin to get into this process and mess around with crypto and DeFi, and you set up your Rabby, your first Rabby wallet, you're going to get that seed phrase. I want you to do 2 things. Number 1, only record that seed phrase as a hard copy. Okay, hard copy only. No digital copies. If you make a digital copy on your phone or your computer, You might lose that. Somebody might be able to hack in and extract that from your phone. There was a thing with iPhones where they were there was some kind of a malicious software that broke into the iPhone and went through all the digital photos on the phone, and it was able to find seed phrases that people had taken a picture of with their iPhone. So no digital copies, hard copy only. That's number one. Number two, never give that seed phrase to anything, anyone, or anything. Okay. A person asking for your seed phrase, that's pretty obvious. You're like, get out of here. No, I'm not going to give you my seed phrase. But a lot of times, the scammers will send you to a website, and it'll be under false pretenses. And you go to that website, or maybe you download an app on your computer or your phone, and the app or the website asks you to put in your seed phrase. Okay, put in your recovery phrase, put in your 12 words, whatever they say on that website or that app. That is the scam. 100% sure you're being scammed if any entity whatsoever, human or otherwise, is asking for your seed phrase. It is definitely a scam. So hard copy only, and keep it to yourself. Never share your seed phrase with anyone or anything, no website, no app, no matter what. That's the most important rule. Okay, so I'm going to use this address here from, I have this little demo wallet here. This is a hot wallet. I'm just going to grab this address and go back to Coinbase. And so if I had Bitcoin in my Coinbase account, I would withdraw that or send that crypto from my Coinbase account to my wallet. Okay. And now we'll do this later with USDC, and I'll show you an even better way to acquire wrapped Bitcoin. But you would paste your address in there, and then you would be able to select the asset. Okay. And I don't have any BTC in here, but if I did, I could go BTC and it would come up. I click on it, and then the last step would be choosing the network to which I want to send that Bitcoin. And while it's being sent from your Coinbase to your Base wallet, that's when it becomes wrapped Bitcoin. Now, under the hood, what's happening here? What's happening is Coinbase is doing two things. The Bitcoin doesn't vanish. The Bitcoin technically is in a Coinbase wallet. Now it's yours, so it's a wallet, and Coinbase understands that that particular amount of Bitcoin belongs to you. But in reality, the Bitcoin is sitting in some big Coinbase wallet. And so if you send some of your Bitcoin from your Coinbase account to a different blockchain, Coinbase is going to do two things. Let's say you send one Bitcoin. We should all be so lucky, right, to have one full Bitcoin. You send one Bitcoin, Coinbase is going to lock the Bitcoin on the Bitcoin blockchain. When it's locked, it can't be spent. It can't be moved. It can't be sent anywhere. It is locked in place. It cannot move. So that Bitcoin gets locked on the Bitcoin blockchain. And then the second thing that Coinbase does is it mints a wrapped Bitcoin token, 1 for 1. Okay, it's always 1 for 1. And so again, there's a little element of trust where we have to trust Coinbase to make good on that. But it's kind of obvious. I mean, if Coinbase completely just robbed everybody, like there'd be hell to pay, their business would completely collapse. It just wouldn't make sense for Coinbase to cheat everybody on that whole tokenized Bitcoin thing. But it is a little element of trust where you're trusting that Coinbase is going to lock the Bitcoin on the Bitcoin blockchain and then mint that token on some other blockchain. So in that sense, the tokenized Bitcoin is backed 1 for 1 by real Bitcoin. You have the real Bitcoin locked on the Bitcoin blockchain, and you have the tokenized form of the Bitcoin on some other blockchain. And then it happens the same way in reverse. So if I send my tokenized Bitcoin from my personal wallet back into Coinbase, that's the reverse process. So those tokens are burned, they're eliminated, they're destroyed, they cease to exist, and then the corresponding real Bitcoin on the Bitcoin blockchain is then unlocked. And so Coinbase just does that over time for people that are wanting to tokenize and untokenize their Bitcoin. Okay. So that's how you would do it if you already own some Bitcoin. Hopefully you have your Bitcoin in self-custody. If you still have your Bitcoin on a centralized exchange, that's not as good. As they say, not your coins, not your crypto. You know, and if something goes wrong with whatever centralized exchange you're using, for example, FTX back in 2022, fraud going on, people lost access to their coins. I think everybody got their coins back. I'm not really sure how that transpired, but the point is, if you don't have self-custody, then they aren't technically your coins. You're trusting, again, you're trusting a third party to custody those coins for you. So hopefully you already have your, you know, if you already have Bitcoin, hopefully you already have it in self-custody. You have your own private wallet with Ledger or whatever. And then what the process for you would be, send some of your Bitcoin to Coinbase, and then almost immediately you withdraw that Bitcoin back out, but you send it to a different blockchain. You know, I don't have an example to show you with the tokenized Bitcoin right here, but I can show you in another form. Now I need to take this over to another screen, because what I'm going to do next, you can see I have to prepare for this demonstration and this teaching moment. I have $100, and this is US dollars that I have in my Coinbase account. So you know, whatever, connect your Coinbase account to your checking account, whatever you do, and get some dollars deposited into your account. And you can do this. And what I'm going to do is I'm going to convert the dollars into USDC. Now, I don't particularly want to share my bank account information. So when I click on this, it's going to default to paying with my checking account. So I'm going to take this over to another screen real quick, and I'm going to choose to pay with my USD wallet. So let me just pop this over to a different screen, and I'll select pay with, and I'll select my cash that I have in the account already, and we'll bring it back. Okay, so I'm paying with my cash, my $100 there, and I'm buying USDC. Now, the nice thing about Coinbase is you can do this conversion all day long, and it's always free. And it's always exactly one-to-one. And as we'll see in a few minutes, I'm actually going to be able to withdraw this without any fees to the Base blockchain as well. So what I'm going to do is I'm going to buy 100 USDC, paying with my $100 of cash. So let's review. Price of exactly $1. Buy now. And done. So if you already have Bitcoin, that was the process. I explained that already. Send your Bitcoin to Coinbase and then withdraw your Bitcoin from Coinbase to a different blockchain, for example, the Base blockchain or the Ethereum blockchain. And that's going to convert it into Coinbase wrapped Bitcoin. If you don't already own Bitcoin, this is the best way to do this. Let me refresh this because it's still showing the USD here. And again, we can't do anything on the Bitcoin blockchain other than send. Like, that's the one thing. You can lock too. You can lock Bitcoin on the Bitcoin blockchain. That's like two functions that you can do. Can't do anything related to DeFi whatsoever. You can't buy, you can't sell, you can't loan, you can't borrow, you can't provide liquidity, none of that, okay? So we need to get our money into a blockchain where we do have all of those capabilities. And this is going to be either Ethereum, that's the main DeFi blockchain. But nowadays we have these layer 2 blockchains, which generally speaking are faster and cheaper to execute on than the original Ethereum. They're associated with Ethereum. That's why they're called a layer 2. They're like a second layer above the Ethereum. But I'm getting too detailed for this. So, so now I have the USDC, and notice it was exactly 1-to-1. So I have exactly 100 USDC tokens here, and these are still in my Coinbase account. Now I need to get them out to my own personal wallet. Okay. And this is self-custody. What you're about to see is legitimate self-custody, which, by the way, crypto was literally invented for self-custody. So if you're leaving your coins in a centralized exchange account like Coinbase or Kraken or whatever, in my opinion, you're really missing out. You're doing it wrong. Crypto was invented for self-custody, and you never took custody of your own coins. So you're taking a risk every day that you leave your coins inside that account. So here's how to do it. Like I said, we set up the Rabby wallet. I myself set this up years ago, and I'm going to select the address, my personal blockchain account. That's the address of my account. So this is an account that only I control. Only I can spend the coins in this account. Anybody can send me coins, but no one but me can spend the coins. Okay. So I'm going to send my USDC from Coinbase to my personal wallet. Again, the essence of self-custody. So I have to grab a copy of this address. If I click this button right here, that makes a copy of my address. And I just like to make a little note here that my address ends in 7424. Okay, just a little mental note, 7424. That's my personal address. Because when I come back into Coinbase, now it's time to do the transfer. I'm going to transfer my crypto from Coinbase to my actual account, my personal blockchain account. So the first thing I'm going to do is just click on withdraw and send crypto. Now I'm going to paste that address. I just copied the address from my Rabby app. I'm going to paste it right here. So this is the destination. You have to tell Coinbase where you want to send the coins. So there's my address, and it recognizes that, hey, you sent some coins to this address a month ago. Yes, I did. I click on that, and there's the list of coins. I don't know why I have a little bit of dust here in Solana, but what I want to send here is the USDC. So I click on USDC. Now, this is the final step. And if you notice, there are a couple of dozen different blockchains that you can utilize USDC on. USDC is a stable coin. Every token represents $1, and it's pretty prolific at this point. DeFi has grown a lot in the last few years, and there are lots of different blockchains where you can do these different kinds of DeFi activities. Again, my favorite at the moment is probably Base. Ethereum is fine, but you can see there's a little bit of a fee for me to make that withdrawal. It's free on Base. The transactions are a lot faster on Base. It's the same tech stack as Ethereum, but it's just faster and way, way cheaper. So the transaction fees that I have to pay every time I do little transactions on the blockchain, those are called gas fees. And on Base, very often, the gas fees are less than a penny, sometimes 0.2 or 0.3 of a cent. So very cheap, very quick to get your different transactions through. And so I'm going to choose Base here in terms of what blockchain am I sending these tokens. Again, I'm sending my USDC tokens from my Coinbase account into my personal blockchain account on the Base blockchain. So I put in the address. Now I choose the network here of Base. And the last step is just to tell it how many coins I want to send. I'll go ahead and send all 100. I'm not sure whether or not it's going to make me put in a 2FA code, but there's the address you can see, and maybe remember I made that mental note 7424. So just a little sanity check. Oh, yep, that's my address. I did the copy and paste correctly. I'm not about to send these coins to somebody else's address. That's mine. I'm going on the Base network, and apparently it's going to take about 10 seconds to actually send this. Look at that. There's no fee to do this. And this is another benefit of Coinbase in particular. These USDC transactions tend to be free. So it looks like I will need to put in, oh, never mind. Away it went. Okay. So it sent the USDC, it left my Coinbase account, and it should show up here in my Rabby wallet. Sometimes it takes a minute or two for things to update. I can do a little refresh right there. And if I click into this, yeah, sometimes the little chart up here doesn't update as quickly as when you click on it. You can see your portfolio. There's the USDC. So I just received that 100 USDC. I already had 0.92 in there, so the transfer happened. Now, I've done this hundreds of times. If you're doing it for the first time, it's free. Send $5, send $10, make sure it goes through, make sure it arrives in your private wallet, and then do the rest. Okay, so now I have USDC in my wallet, and this is for the people that don't already have Bitcoin. Whether it's regular Bitcoin or tokenized Bitcoin, you don't have any Bitcoin. The best way to buy Bitcoin is on a decentralized exchange. Now, I made a whole video about this. Where'd it go? Right here, 12-minute video, how to save 99% on your trading fees. If I buy Bitcoin, I can buy Bitcoin on my Coinbase account, but it's going to cost me 100 times more in terms of the trade fee. It's going to be 100 times more than what I'm about to spend on a decentralized exchange. So you're learning the difference between a centralized exchange and a decentralized exchange. Number one, a decentralized exchange deals with self-custody. So I'm always in control of my assets. All of my coins and tokens are in my possession in self-custody. I never have to worry about some company committing fraud like FTX. Number two, the fees on a decentralized exchange are about 99% cheaper. So I don't have to pay a big 1.2% trade fee. I'm probably going to end up paying 0.01% to trade my USDC for some wrapped Bitcoin. Okay. So major advantage to a decentralized exchange to self-custody crypto. And again, by the way, crypto was invented for self-custody. So this is really the way you should be doing it if you're at all interested in, investing in crypto and DeFi. Everything needs to be self-custody. And it's a great place to be because it's cheaper. It's way cheaper. Those of you that are like me and very miserly and like to save a buck no matter what, you'll love that as well. So the next thing is I want to actually swap my USDC for some tokenized Bitcoin. Okay, I'm going to use a decentralized exchange to do that. Matter of fact, I'm going to use a DEX aggregator. So this takes the decentralized exchange and on steroids, because the aggregator is going to go out and it's going to compare the exchange rates of a whole bunch of different exchanges, and then it's going to route my trade to whichever exchange is offering the very best exchange rate. So it's called a DEX aggregator, and I'm going to use a DEX aggregator called 1inch. Now, here's a little safety tip. For those of you who are just getting started in crypto and DeFi, especially in DeFi, you're going to want to use these different protocols, and you need to know the website. Okay. Now you can go to these websites and then, set up a bookmark and whatever, and then you have it. But if you've never been to a particular website and you hear me saying, oh, go to 1inch to do your swaps, please do not do a Google search. Okay. Literally, the scammers will pay Google to have their scam websites appear at the very top of those search results. And you'll click on that and it'll look just like the real thing, but it's not. It's a scam. You'll lose your money. So stay away from Google when you're trying to figure out or trying to find a particular website. Thankfully, Rabby has this special directory built right into the app. So if I go to my Rabby app and I've pinned, this is called a browser extension. So it's like an app within my browser app. This works for Chrome. I'm using Brave, same difference. The browser extension, or this app within my browser app, what I've done is I've pinned it. I come over here a long time ago and I pinned my Rabby app to the dashboard here. So I could always just have that little purple bunny right there. So I click on that. Now they used to have it right here on the main menu. They don't have it anymore. So nowadays you have to click on this little settings icon here and then select search dApps. So this is almost a full directory of pretty much every and any DeFi website that you could ever want. And these are all the official website URLs. Okay, so you don't have to worry about doing a Google search. And as a matter of fact, avoid doing Google searches. Just use this directory here. And then you can search for, like I said, 1inch. So there is the official URL for the 1inch DEX aggregator. Okay, so I'll click on that, and that's going to bring up the site here. Now, you saw when I was sending that USDC from my Coinbase account, you saw maybe a couple of dozen different blockchains where I could send my USDC to these different blockchains, and I chose the Base blockchain. 1inch has a presence on multiple different blockchains. So what I'm going to do first, before anything else, is I'm going to select my tokens, but I'm also going to select the blockchain where I want to do the swap. Okay. Now, by the way, my wallet is already connected. If it's your first time, it will have a button right there. It'll say connect wallet. You click on that, you choose Rabby, boom, you're connected. And that enables the protocol to see your wallet. It can't touch your wallet. It can't take any coins from you, but it can see the contents of your wallet and the coins that you have in your personal account, so to speak. Okay. So once your wallet is connected, you can see here, it's already set to the Base blockchain. And you can see right there, it can already see the exact USDC sitting in my wallet right now. Now, that's because I just used this very recently. So it might not look like that for you. In fact, it'll probably default to the Ethereum blockchain. And if you put your USDC on Base, it won't see it. It's not going to see it on the Ethereum blockchain. It needs to see it. It needs to be connected to the Base blockchain. So how do you do that? So what you do is just click on the asset. Now you see this arrow here. What this is saying is this is your input. That's what you're going to send. And this is your output. That's what you're going to receive. So in this case, the way this is set up is it's looking to trade USDC for Venice, the VVV token. I'm pretty interested in the Venice protocol and Venice AI. I think it's a neat project. So I recently bought some tokens. But so up here is what you're going to spend, and down here is what you're going to buy. Okay. So this is called a swap. You're swapping one token for a different token. So let's click on this first one. And even though it's already set to USDC on Base, which is correct, I want to show you and walk you through this process. So what's our input? What token do we want to swap or send to the exchange? First of all, let's select the correct network. So here's these, again, maybe a dozen different blockchains. where 1 inch does swaps. Okay. So depending on where I put my USDC, I need to select the proper network. So right there under the Ethereum category, these are all layer 2 blockchains. So it's essentially one level above, but the foundation is the Ethereum blockchain. Again, I'm getting overly complex with this. Just select the network where you have your tokens. Okay, so in my case, and probably in your case, it's Base. So select Base, and then you want to designate what token you're going to spend. What are you going to spend? And then later in a moment, we'll talk about what we're going to receive. So in my case, I want to spend my USDC. By the way, I'm honestly tickled to be able to buy Bitcoin for $58,500. I think this is a fantastic price. Could go a little bit lower, but I don't think it's going much lower. But anyway, fantastic opportunity, in my opinion, not financial advice. I'd love to be able to buy Bitcoin for less than $59,000 a coin. I think it's an absolute steal at that price compared to where it's going to be 2 years, 3 years, 5 years from now. It's definitely going to be much higher, in my opinion. Anyway, where were we? So I'm going to spend my USDC tokens or USD coins. If this didn't appear for some reason, you can search for it, USDC. That is the token that we want to spend. So I'll go ahead and select that right there. So now this is loaded up. Now, what do I want to receive? And again, this will probably default to Ethereum when you're using this for the first time. So do both of these. Make sure it's the right network and the right token before you click the go button. Okay. So I'll click right down here and I'll get to choose what I'm going to receive out of this swap. I'm going to trade USDC. And in my case, I want to buy some wrapped Bitcoin. It's not BTC. The only place that Bitcoin exists by definition is the Bitcoin blockchain. So in DeFi, we literally can't use real Bitcoin. We have to use tokenized versions, but it's all very safe and secure. I honestly, I don't think we have anything to worry about in terms of Coinbase somehow, reneging on the whole Coinbase wrapped Bitcoin token and depegging or anything like that. And by the way, if you are worried about that, I think you can wait a few more weeks, or actually, I think it's available now. Circle, the company that gave us USDC, the regulated US company, they actually now have their own version of tokenized Bitcoin. It's called Circle BTC, CIR BTC. So you could use that. I don't think it's available on Base, but it should be available on Ethereum. Let's see. So let's choose Ethereum, and let's see if we can buy Circle BTC. Now, it was recently announced, I think just a few weeks ago, so it probably hasn't actually been implemented, but very soon we'll have a Circle version of wrapped Bitcoin. If you're feeling sketchy about Coinbase, I've been using Coinbase wrapped Bitcoin for years now. I think it's fantastic. I don't have any worries about it. But again, if it didn't show up down here, you just want to type in CB, stands for Coinbase BTC. So that is the Coinbase wrapped Bitcoin token. It's not real Bitcoin, but it's basically just as good as real Bitcoin. And here's the big bonus. Once we have this tokenized Bitcoin in our wallet, then we'll be able to borrow against it, which that's the whole point of tonight's live stream, is how do you borrow against Bitcoin? So I'm going to select that, and I'm just going to go ahead and click on that max button. So that will spend all of my available USDC, and this is going to purchase or swap the USDC for Coinbase wrapped Bitcoin. Okay. I don't think this interface will show us the fee. Well, there it is right there. Order execution cost, 0%. Price impact, 0.01%. Okay, so that will vary as the volume goes up and down, but at least an order of magnitude, if not 2 orders of magnitude cheaper than trading on Coinbase. So much, much, much lower trading fees if you can do your swaps and your trades on a decentralized exchange, or better yet, a decentralized exchange aggregator like 1inch. You're going to save a ton on your fees. So let's go ahead and do the swap, and we will. This is our private personal wallet, our own blockchain account. So we will have to sign this transaction in our wallet. So you see the Rabby, hopefully you guys see that. Yep, you see the Rabby pop up here, and it's telling me what's going to happen. This is a swap order. I'm paying USDC, and I'm going to receive Coinbase wrapped Bitcoin. And so let's go ahead and sign that transaction, cryptographically signing and confirming this transaction. This will take a moment. And this lights up in green, meaning the transaction has completed. Perfect. So let's take a look again at Rabby. And there it is. So now I have the Coinbase wrapped Bitcoin. The USDC is gone because I spent it. Now we're going to get to the borrowing against the Bitcoin. So now I have this Coinbase wrapped Bitcoin. I'm going to use a protocol called Aave. Again, if you've never been to Aave and you want to know the official URL, just go to your webs or your DApp search on Rabby and just type in Aave. AAVE. So there's the official website right there. I already have it up. And again, if it's your first time using this, your wallet will not be connected by default. So you'll have to click the button to connect your wallet. And it'll also probably default to the Ethereum blockchain. So once again, just like when we withdrew coins from our Coinbase account, we had a choice of networks. When we did a swap on 1inch, we had a choice of networks. And when we're utilizing the Aave protocol, once again, a choice of networks. So my coins are on the Base network. So it was already on there, but you would want to switch if it defaults to the core Ethereum network. You would just drop that down and select Base. Now it can already see my Coinbase wrapped Bitcoin right there. And this is under the assets to supply. So again, since my wallet is connected to this protocol, it can see into my wallet. It can see the coins that I have. Okay. So I'm going to supply these tokens to Aave. That gives me collateral. And once I have collateral, now I can borrow against that collateral. And we'll get to the last part of this. We're already at time here. It's been about an hour now. The last part is I'll show you our app. Our Overseas DeFi app has a tool that's very helpful when you're deciding how much you want to borrow. So let me go in here and supply this extra Bitcoin. I've already supplied some. I'm going to supply the rest of this. So I just click on supply, and it can see that, again, the contents of my wallet. I'm just going to put all of it in there. I'm going to use the option for 73% LTV. This allows me to borrow all eligible assets. Actually, I don't mind if it was 80% LTV and I can only borrow USDC, but I'll just leave it like that. And I have to do 2 things to do this. So number 1, I have to do what's called a token approval, and that's giving the Aave smart contract permission to take coins out of my wallet. Okay, I have to sign this, cryptographically sign this transaction, and I have to give that approval for that smart contract to be able to even deal with my wallet. Okay. And the second thing, the second transaction, so I'm going to do two transactions. The first one is the approval. The second one is where I'm actually sending those tokens from my wallet into the Aave smart contract. So watch how quick and easy this is. So first of all, let's do the approval. You can think of the token approval as kind of like a permission slip where you're giving permission for the smart contract to interact with your wallet. Now, the default here is this big giant number, and this is what we would refer to as an unlimited approval. There's no need for any of us to issue an unlimited token approval. I don't think you can get hurt, but it is possible that if this smart contract was ever exploited, the attackers could then go into your wallet and extract any Coinbase wrapped Bitcoin that you happen to have because you granted that unlimited approval. Instead of granting an unlimited approval, I'm just going to click on this link right here, and I'm going to reset the amount to match with the balance of my wallet. So my balance. So now I'm only approving the actual Coinbase wrapped Bitcoin that is currently sitting in my wallet. And once that transaction has been executed, now there's zero approval. So you use up that permission slip whenever you deposit the tokens into the smart contract. So that's the token approval, sign, and confirm. I know I'm going through a lot of information here. So I apologize if it's drinking from a fire hose. If you want to rewatch the video, that I'm sure would help. And also have additional videos. This video right here takes you through the full process that I'm actually demonstrating right now. It's almost exactly the same. Well, it is. It's the same process here. So if you want to rewatch this, this procedure, if you're doing this for the first time, just log on to that video right there, and it'll take you through the steps one by one. Where were we? Over on Aave. So we've done the token approval. Second transaction is to actually supply. So what's happening here, and you'll see this in the Rabby pop-up window, it's going to explain what's about to happen. So the red negative number here means I'm sending those Coinbase wrapped Bitcoin tokens from my wallet. So those coins are leaving my wallet and going to Aave. And you notice the green positive number here. This is a special token that Aave mints. And this is almost like a claim check. Like if you go to the cleaners and you drop off your shirts and slacks, the dry cleaner or the cleaners will give you a little ticket, like a claim check. And then you take that and you go in a few days later and you give them a claim check and they give you your clothes. So the Aave token is like that. It's like a proof token that I hold in my wallet that means this Bitcoin is mine. It belongs to me. So this is like a claim check token, like I said, and you can see that token is going to be minted and that's going to be sent to my wallet. So everybody knows that Bitcoin I just put in there belongs to me because the claim check token is in my wallet. Okay. So those are the two token transfers that are going to happen. And all I have to do is sign and confirm. And it's all done. You supplied 0.0017229 Coinbase Bitcoin. And don't worry about adding it to your wallet. That's for wallet apps that aren't as cool as Rabby. Rabby does everything automatically, so it's really nice. And now I have more collateral. I think I only had about $92 in there. Now it's $192 in my collateral. Now, sometimes the app will not be super quick to update, but I'm going to go ahead and refresh the Overseas DeFi app. So this is our portfolio tracker. If you join Overseas DeFi, we have our Overseas DeFi community at $97 a month. You get all the video courses. You get a live call once a week where you can bring in your questions and share your screen and get some help. And we have a full Overseas DeFi AI chatbot, which is not just a normal chatbot where you're going to ask ChatGPT or Claude how to do things in DeFi. No, this one is completely trained on all of our content, all of our strategies, all of the open office hours calls that we've ever had, all of the workshops, just everything that we've ever done over the last year or so in Overseas DeFi is all built into this AI. So this is very intelligent in terms of, those 3 o'clock in the morning, you're trying to do something and you need some help. This thing is going to be able to do really well in terms of guiding you through the different sorts of things that you're doing in crypto and DeFi. So it looks like it did. Yeah, it looks like it did update here. And a couple of nice things in the app. So this is our portfolio tracker. Like I said, you get this with Overseas DeFi Community, or we have our accelerator program if you want to go a little bit faster. And if you have more capital to deploy, certainly would recommend checking out our accelerator program. This is going to show you your portfolio if you have any liquidity positions open. I don't have any perps positions in this wallet, so you don't see that here. But if you had some perps positions on GMX, that would show up in here as well. Your spot assets. And what I want to demonstrate here quickly, because I'm running out of time, the lend and borrow tab is going to show you your position. So you can see here on Base, on Aave, there's my current health factor, my net worth. My current loan to value ratio is only 31.34%. Now, one thing I want to point out is it calculates your liquidation price. That's something that you will not find on your Aave dashboard. You can look at risk details and you can see your LTV and you can see your liquidation threshold, but it does not do the calculation, do the math for you to tell you, okay, well, what price would Bitcoin have to drop to for me to have to worry about getting liquidated? That's just not available, but our app calculates that and gives you that information right there. So this is what you can use to kind of inform your decision. Like how low, maybe you're one of those people that thinks Bitcoin's going to go all the way down to 20,000, in which case you probably need to do something about this because it's not going to survive. This is going to get liquidated closer about 23,500. Okay. Now I would assume you'd have a ton of time. First of all, I don't think that Bitcoin is going to go anywhere near that low. But if it did go that low, like you're going to have time. You'd be able to pay back some of your loan or maybe add some more collateral. Somehow you could defend the position well before it reaches your liquidation price. But it's very helpful to just look at this and be able to know, okay, that's my line in the sand. As long as Bitcoin doesn't go down to 23,513, I'm safe. I'm not getting liquidated on this position. Now, the other thing I want to show you on this app is what we call the liquidation test. So this allows you to run through a whole bunch of different scenarios in terms of what you're lending, what you're borrowing, and what the price does, and then figure out like when you would get liquidated and what the price would have to be for that to happen. Okay, so what I want to show you is I'm going to take this, I'm going to kind of reverse engineer this. And I talked about this in the lending video on the channel. My starting point is going to be my opinion. And I'm going to say, in my opinion, Bitcoin could go lower from here. But in my opinion, Bitcoin will not go lower than 50,000. Let's try that, okay? So if I firmly believe that Bitcoin will not go lower than 50,000, what I'm going to do is I'm going to dial this price scenario down. And notice every time I click that button, the price is going down by 1%. And you can see the price of Bitcoin right there. So if price dropped by 10%, that means Bitcoin would be roughly 52,600. So that's still higher than my my $50,000 number. So let's keep going with it. And let's imagine that Bitcoin dropped. Let's do that. So Bitcoin drops 15%. The price goes down to 49,739. And look at my LTV. Okay. It's still only 37% roughly. And my liquidation threshold is 78%. So there's still a ton of wiggle room here. So now that I have that price dialed in, let's change my debt amount. So currently, I've already borrowed $60 in USDC. Again, this is just a demo wallet that I use for things like this. So not a ton of capital in here, but the point is you can make these decisions and use these tools with whatever portfolio size you happen to manage. So what I want to do is figure out, okay, well, how much could I borrow where I've maximized that potential? I've borrowed the most money that I can, and yet I'm still going to survive down to just less than $50,000 Bitcoin. Okay. Now, if you're not comfortable with that, this number comes from you. Okay. I can't tell you how low it will go. I have my opinion, but it's just a guess, right? I can't predict the future. I wish I could, but I cannot. So this part of it doesn't come from me. It comes from you. I'm just showing you the process. And the process starts with you do a thought experiment and you go, okay, how low could it go? Maybe for you, it's 40,000. Maybe it's 30,000. Maybe it's 55,000. I don't know. Whatever that is for you, that's your starting number. And you dial the price down to that number. Maybe give it a little bit lower just for a little bit of a cushion. And then you can edit your borrowing amount right here and you'll see what happens. So let's say I have 60 borrowed. Let's say I want to borrow another 40. Okay. Now that would put my total debt up to 100 USDC. So if I hit enter, see how the LTV grew, but it still didn't reach the liquidation threshold. So then I know, keep going. Okay. Maybe I can borrow $50. So 60 plus 50, that would be 110. Let's see what that looks like. I'm still safe. Okay. Maybe I could squeeze a little bit more. So let's try 115. Okay. Still safe. I'm going to stay with that. You know what? Because better safe than sorry. Again, I'm not worried about this account. There's $200 in there. But if I only borrowed an additional $55, let's see how low we could go. So if right now today I borrow an additional 55 USDC, and then the price drops all the way down to 45,058, I'm still not liquidated. I mean, I'm super close. It wouldn't take much. But I really don't think that Bitcoin will go even below 50,000. To be honest, I don't think it's going to go lower than 55,000. It might already be in. The bottom might already be in at 58,000. But anyway, that's how you would figure out how much you can borrow. Okay. Now, this is just math. So you can do the math yourself on a spreadsheet or a calculator or whatever. But the app is helpful and that just to kind of work through those numbers and figure it out. Okay. So the last step is to go ahead and borrow. And this is the best part. I saved the best for last. I want to show you guys how quick and easy this is. Now, again, before I do this, let's look at my wallet. Look at what's in there. The coins that are in there, basically nothing. That needs to refresh. There it did. I have $4 worth of ETH. That's my gas money in the wallet. And that's pretty much it, right? I have equity in Aave. I have a liquidity position on Uniswap. But in terms of tokens in my wallet, The only thing that's in there is $4.10 of ETH for now. Let's go ahead and borrow the 55 USDC. So I click on the button. Let me do that again. Right here on the right side of the page, assets to borrow, USDC. There's the interest rate. It's a variable rate. Generally bounces around between 4.5%. I click on borrow. I tell it how much to borrow, 55 USDC. Okay. It tells me that my health factor is going to reduce and liquidation happens at a 1.0 health factor. We just saw on the app, no problem. I can survive all the way down to roughly $45,000 Bitcoin. Ain't no way it's going that low, in my opinion. So I acknowledge the risks involved. You might be more conservative than me. If so, then just drop that price. Reduce your line in the sand to a level that you're more comfortable with. I'm perfectly comfortable with $45,000 Bitcoin. I don't think it's going that low. But you might want 40,000, 35,000, 30,000, whatever. Then you can just be more conservative. You can customize it for you. Okay. But look at how quick and easy this is. I didn't have to go to a bank during office hours. I didn't have to fill out any forms. There's no credit check and there's no waiting period. This is instantaneous, practically instant. So I click the button, borrow. The Rabby pulls up the simulation and it shows you, okay, you're going to receive 55 USDC tokens. You're also going to receive a special Aave token that keeps track of your debt. Sign and confirm the transaction. As they say, bada bing, bada boom. The money is now in my wallet. You can see it right there, 55 USDC in my wallet. It might be a little bit slower to update on Rabby, but let's see. There it is. So that money is now sitting in my wallet. It instantly came out of the Aave smart contract. As long as Bitcoin doesn't go down to $45,000, I don't get liquidated. There's no problem. And that money is in my wallet. If I wanted to, I could just send that right back to my Coinbase account. I could literally just send it there and convert it back to US dollars and take it out to my checking account. I used to have a credit card. Honestly, it's one of my wife's credit cards that the interest rate on the credit card was 30%. I borrowed, I don't remember what it was, maybe $15,000 of USDC and paid off that credit card. And so the debt went from 30% per year to roughly 4.3%. You can do that. Now in DeFi, we like to deploy the borrowed capital into a liquidity position, and that way we can generate cash flow while we're waiting for the price of Bitcoin to appreciate. But there's a whole range of possibilities as far as what you can do with that borrowed capital. And as long as you don't get liquidated, then theoretically you don't ever have to pay back this loan. That's the other thing. That's the other big difference between borrowing money in DeFi versus borrowing money from a bank, right? There's no payment plan here. The interest just accrues to the balance of your loan. So over time, this loan amount will increase very, very slowly. If my Bitcoin appreciates more than 4.3% a year, then my net worth just keeps growing on this, and I literally never have to pay back this loan, right? Now, that's a conditional statement. If Bitcoin appreciates more than 4 or 5% per year, then the value of my collateral increases faster than the value of my debt. And I'm constantly in a healthier, a more and more healthy lend borrow position. Okay, no need to pay back the loan. As a matter of fact, if Bitcoin has a great year and it goes up 50% or 100%, I might actually even borrow more. Okay. But that's the magic. I mean, in DeFi, you get that money instantly. It's in your wallet. Everything is self-custody. Everything is in your control. You are the master. You are your own bank. And it's crypto is so much more than sending coins from one wallet to another. But most people don't understand that. Most people buy well, let's be honest. Most people don't even buy crypto to begin with. But those of us who do buy Bitcoin, maybe even ETH or Solana, most people that actually buy crypto leave their coins on the exchange. I say, take custody of your coins into DeFi, utilize these protocols to make extra money. See, now that I have this extra $55 sitting in my wallet, I can plug that into my liquidity position, right? And I just gave myself a pay raise in terms of my daily cash flow. That's what this video is all about right here. Getting paid every day when other people trade. So the next video to watch, this one right here. This tells you what you can do with that borrowed capital, and you can actually earn a very nice yield and get cash every single day from that borrowed capital. You don't even have to invest your own money. You can invest borrowed money, just like Elon Musk. He borrowed money to buy Twitter. I would say that was a pretty good investment. We can do that in DeFi all day long. Borrow cheap capital, and then deploy that into a liquidity position and earn a great yield. And I'm talking about at least 30 or 40% APR. More typically, the yields that we earn on capital that we deploy into liquidity positions, we're talking about 65, 80, 100. I have positions that earn more than 100% per year in fees. So that's a fantastic opportunity, in my opinion. We call that the DeFi carry trade, where we're borrowing capital at a low interest rate, maybe 4 or 5%, and then we're deploying that borrowed capital into a liquidity position that earns 60, 80, 100, maybe even 120% per year. And the difference is pure profit. So lots to explore in DeFi, and I've rambled on way too long on this video. I appreciate those of you who stayed with me till the very end. Nobody had any questions. Hopefully next time, you guys will experiment with this and try this out. And that's another great thing about DeFi. You can try it out with, you saw $100. So no significant risk. Just get started, mess around with it, see what you can earn. I had a gentleman that commented on one of my videos just a little while, just a couple hours ago, saying, thanks for this information. It actually works. I made a position and it's actually paying me every day. So it really does work. I know it seems too good to be true, but it isn't. That's the opportunities that we have in DeFi. So anyway, thank you so much for watching. Make sure to like the video, subscribe, turn on notifications so you can be present for my next live stream next Tuesday at 6 p.m. And if you have some questions, great. I'm all about it. I don't care if I spend the entire hour just answering your questions. If you've got questions, bring them. I'm here to help. All right. Thanks so much for watching. I'll see you guys next time.